Brompton Bicycles. It was really interesting because the topic and the fact that this is a real company and we're discussing the happenings of the previous year makes it really relevant and interesting to study. So, thanks for a pick. I've chosen a question regarding the state of the British pound in 2020, how it affected costs and revenues for the company, and what could be recommendations for increasing the profits of the company if the British pound will continue to depreciate. First of all, I would like to analyze what's the impact in terms of difference in exchange rate between British pound and euro. Euro will speak because it's the similar geography. Great Britain has close ties to European Union and was part of it for quite a while, and the European Union is and will be an important trade partner. So euro is it's important to compare to euro. So we have several means for comparison. We have historical chart, which outlines, as I found, three stages in evolution of the British pound against euro or the previous year. The rate was plummeted, then it grew and it fell again, and then it's upwards slope of the trend, which we see at the later stage after September. It looks like, so we will be analyzing the case where the pound will be weaker next year, but from this chart it looks like it can appreciate. Nevertheless, the exchange rate at the start of the year was 1.80 and 1.10 at the end. Depreciation happened. On the other case, we can also analyze the average exchange rate across the year compared to the previous years. Here we see decrease as well. The average rate was 1.12 euros per British pound, which is 1.32% lower than the previous year. From this analysis, I would like to know that although British pound depreciated, and we see volatility on the left-hand side chart, it's not that dramatic difference. The depreciation isn't 5% depreciation, 10%, 20%. I know currencies that depreciated 2 times. This is a real shock to economy. 1.32%, it could be manageable. Effects of a currency devaluation on economy. In terms of our case study, I would like to point out that imports will be more expensive and exports will be cheaper. Brompton Bicycles has only around 25% of componentry sourced from other locations, and the company has the strategy of keep everything as much as possible within the country. It's positive in terms of costs. Depreciation of British pound will mean that 75% of components will be cheaper compared to other currencies. The same with labor costs. So the British-centric strategy that Brompton Bicycles naturally developed across own history will pay off well. If the British pound will be depreciating and paid off well in 2020. Speaking about revenues, exports are higher, although, exports are higher because demands go up with lower price. It's a big win because most of the sales are happening outside of the country, It's 1,400 representatives with 14 offices, I believe, across the globe, and the most sales are outside of the Great Britain. And the major growth of the bicycles markets geographically will happen outside of the Britain. As we can see from the charts, from the table on this slide, there are three markets I would like to point out because they plan to experience the highest growth, year-to-year growth. It was an estimate until the 2027, and these are figures how much each market will grow each year. So I've counted what was the price for the bicycle at the start of the 2020 and at the end of the 2020, and it turned out that in China it's around 5% cheaper by the end of the year. Pretty similar dynamic happens in Germany. Although in Canada it happened to be a bit pricier, around 2% pricier. The difference doesn't look that significant, although it is. That's why we can't simply state that the British pound weakened, because other currencies comparatively can weaken or strengthen. So the table implies that it's a good chance to sell more bicycles in 2020 in China and Germany, that the sales were higher. Unfortunately, from case study we don't have sales figures. And I was counting the price of the custom bike, the starting price, which is £770. And what's the difference at the end of the year? So mostly it fell, and the most important in China, where the market is big and the most of the growth is expected. Regarding profit maximization, first of all, it's important to expand sales and marketing operations on the global markets, targeting high growth countries, as we've spoken about them. Brompton Bicycles actually have plans in hiring additional 200 members in Germany in order to increase sales, so it will be resource used for increasing sales, which is the strategy to follow and to scale globally, especially in China, Canada, and other growing markets. Then it makes sense to be leaner on the stock, that's bought locally. If the pound will continue to drop, it will be cheaper and cheaper to buy. So, if possible, amount of batches of details bought that will not hurt this. So the action should take that not hurt operations as usual. But it makes sense to decrease stock and to work leaner, because it will be cheaper and cheaper to buy details, parts, materials. On the other hand, with 25% of the materials that are currently bought outside, which is rubber, steel, titanium, it makes sense to stockpile them, because if the pound will continue to drop, it will be pricier to buy these materials. Although it should be a correction to specific countries where from the import comes, it's a chance that there would be also currencies weaker than British pound, and that it will be still more profitable to export from them. Also, it's an interesting topic that customer base age for foldable bikes shifts from over 50 to under 40. So marketing efforts should change positioning to appeal to the new auditory. I took my research a bit further into critical thinking of what was stated within this case study, and there were two academic papers. First paper analyzed the dynamics of exports for Romania at the given period of time with the current currency depreciation, and they didn't found that exports go up and have strong correlation. So they imply that correlation, that depreciation alone can't make exported goods more demanded, that it's much more to this to be successful in exporting than simply depreciating the local currency. Another study where professors from Singapore and China analyzed Chinese economy, they found that currency appreciation by 1% caused total exports to fall by 89%. So, although we are not sure if depreciation of the currency will increase the sales, we can be on the safer ground stating that the export would not fall because of the depreciation of the currency. Here are references. I pulled information from several websites across the web. No specific style of citation was used. Hope it's fine. Thank you for listening. Have a nice day.